What if I told you that the financial advice your parents gave you, that every bank promotes, that 90% of experts recommend, is quietly stealing thousands of dollars from your future? That emergency fund you're so proud of? Right now, at this very moment, it's making you poorer. And by the end of this video, you'll understand exactly why wealthy people almost never do what you've been told to do. Here's what nobody tells you about emergency funds. Right now, the average American keeps around $22,000 in their savings account. Sounds responsible, right? Here's the problem. That savings account is probably earning you around 0.5% interest. Maybe you're smart and you've got a high-yield account earning 4 or 5%. But here's the number that changes everything: inflation. Over the past 3 years, inflation has averaged over 5% annually. Which means every single day, your emergency fund is losing purchasing power. That $22,000? It can buy less and less every month. And here's the question that kept me up at night when I first discovered this: if your money is guaranteed to lose value just sitting there, why does every financial advisor tell you to do exactly this? There's a reason. And it has nothing to do with your financial well-being. Let me show you the actual math. If you kept $50,000 in a traditional savings account for 10 years at 0.5% interest, you'd earn about $2,500. Sounds okay until you factor in average inflation of 3%. Your purchasing power would have decreased by over $15,000. You didn't save money. You lost $12,500 in real terms. But here's where it gets even more disturbing. While your money was slowly dying in that savings account, the S&P 500 averaged around 10% annual returns over the same period. That same $50,000? It could have grown to nearly $130,000. The difference isn't just a few thousand. We're talking about $80,000 in lost potential wealth over a single decade. And the craziest part? Banks know this. They're using your deposits to invest and make those returns themselves. You're funding their wealth while your purchasing power evaporates. But there's a specific reason they've convinced you this is the safe path. Stop. I need to address something before we go further. Some of you are thinking, but what about security? What about peace of mind? And you're not wrong to think that. Emergency funds aren't stupid. The concept makes sense. But here's the pattern interrupt that changed everything for me. What if security and growth aren't opposites? What if the people who told you it's one or the other were the same people profiting from your fear? I studied how ultra-high net worth individuals handle emergencies. People with 10 million plus in assets. And guess what? Almost none of them keep 6 months' expenses sitting in a savings account. Not because they're reckless. Because they've discovered something better. They use what I call the tiered liquidity system. And once you understand it, you'll never look at emergency funds the same way again. The wealthy don't choose between security and growth. They've engineered a way to have both. But here's the thing that most personal finance channels won't tell you. Everything I just explained? That's only scratching the surface. The real reason traditional emergency fund advice persists has nothing to do with your protection and everything to do with a system designed to keep you afraid. Think about it. Who benefits when you keep large amounts of cash earning almost nothing? Banks use fractional reserve banking. Your $50,000 deposit lets them loan out around $450,000. They're making 8, 9, 10% on loans backed by your money while paying you pennies. Financial advisors? Many earn commissions on products, but they can't earn anything on money sitting in a savings account. So why do they still recommend it? Because the alternative requires education. It requires you to understand options. And educated clients are harder to sell to. This isn't a conspiracy. It's just incentives. And right now, the incentives are not aligned with your wealth. What comes next are the 7 alternatives that wealthy people actually use. Alternative 1, the high-yield savings ladder. Instead of one account, create 3. Tier 1, 1 month expenses in traditional checking for immediate access. Tier 2, 2 months in the highest yield savings you can find, currently around 5%. Tier 3, the remaining 3 months in treasury bills or I-bonds earning inflation-adjusted returns. This alone recovers most of your inflation loss while maintaining liquidity. Alternative 2, the margin account strategy. This is what many wealthy investors use. Keep your investments fully deployed in the market. When emergencies hit, borrow against your portfolio through margin at rates often under 8%. You stay invested, your money keeps growing, and you only pay interest on what you actually use. Yes, there are risks here, and this isn't for everyone. But used correctly, this keeps 100% of your money working. Alternative 3, HELOC as emergency backup. If you own property, a home equity line of credit costs nothing until you use it. 0 sitting in cash. 0 losing to inflation. Instant access to potentially hundreds of thousands when needed. Now I need you to pay very close attention to the next 4 alternatives. Because these are the strategies that separate 6-figure earners from 7-figure wealth builders. Alternative 4, Roth IRA contributions can be withdrawn penalty-free anytime. Fund your Roth, invest aggressively, and your contributions serve as an emergency backup that's been growing tax-free. Alternative 5, cash value life insurance. I know, stay with me. Wealthy families have used this for generations. Properly structured policies let you borrow against cash value at low rates while the policy continues growing. Alternative 6, income stacking. Instead of saving for emergencies, create multiple income streams that cover emergencies as they happen. Rental income, dividends, side businesses. This requires upfront work but eliminates the need for large cash reserves entirely. And Alternative 7, the one most people never consider, strategic debt. Having access to 0% promotional credit cards or personal credit lines means you don't need cash sitting idle. Emergencies become cash flow problems you solve over 12 months interest-free. So here's the answer to the question I asked at the beginning. Why do financial advisors keep recommending emergency funds that lose money? Because the system was never designed for your maximum wealth. It was designed for minimum risk to financial institutions and minimum effort for advisors. The traditional emergency fund protects them from liability. It's the safe recommendation. Nobody ever got sued for telling you to save money. But wealth isn't built by following the safe path everyone else takes. It's built by understanding that liquidity and growth can coexist. That protection doesn't require sacrifice. That every dollar should be working for you, not slowly dying in a savings account. The wealthy understand one thing that changes everything: your emergency fund should be a system, not a savings account. Tiers of liquidity. Multiple access points. Money that protects and grows. This is what separates people who save from people who build wealth. And now, you know the difference too. Here's what I want you to take from this. I'm not telling you to drain your emergency fund tomorrow. That would be reckless. What I am telling you is to question the default advice. To run the numbers for your situation. To consider whether keeping 6 months of expenses in a low-yield account is really serving you or serving someone else. Start small. Maybe move 1 month of reserves into treasury bills. Open that Roth IRA and start building an alternative safety net. Research the HELOC option if you're a homeowner. Every dollar you convert from sitting idle to actively working is a dollar building your future instead of decaying into the past. The wealthy didn't get wealthy by following the same advice as everyone else. They questioned. They calculated. They built systems. And now that you understand what they know, you have a choice. Keep doing what you've always done. Or start building real wealth today. The money you save from this single video could be worth tens of thousands over your lifetime. Now you know why your emergency fund might be your biggest financial mistake and exactly what to do about it. If this changed how you think about money, smash that subscribe button because we expose financial myths like this every single week. Drop a comment: how much are you currently keeping in savings, and which alternative strategy sounds most interesting to you? Next week, I'm revealing the investment that wealthy families have used for centuries that nobody talks about. You don't want to miss it.